Joel Greenblatt is an American investor and financial expert. Born on December 13, 1957, Greenblatt grew up in New York. His father was a postal worker, and Greenblatt attended Queens College. Greenblatt is one of the influential figures in the investment world and serves as an inspiration to many investors. He has been a professor at Carnegie Mellon University and founded an investment firm called Gotham Capital. He has also worked as a lecturer at New York University. Greenblatt gained recognition for his achievements in the 1980s and 1990s. He is the creator of one of the most famous investment strategies, the magic formula. This strategy is based on selecting stocks based on their good company value and potential for high returns, aiming to provide investors with high returns. Greenblatt's investment success has been achieved by employing a simple strategy that anyone can use. He has also written several books that discuss the necessary skills and strategies for investing, including The Little Book That Beats the Market and You Can Be a Stock Market Genius. Greenblatt is also known for his efforts to increase financial literacy. He has been a speaker at various educational institutions and organizations and has written articles on financial literacy. Additionally, he has made donations for charitable causes. Joel Greenblatt remains an important figure in the finance world, leaving a significant impact through his investment philosophy and impressive endeavors. For all this and more, before starting the video, if you're interested in universal economic history, you can subscribe to my channel and turn on notifications to be informed about new videos I upload every day. Enjoy the watch.
Universal economic history.
The magic formula is a simple investment strategy developed by Joel Greenblatt. This strategy is based on selecting stocks with good company value and potential for high returns to provide investors with high returns. The magic formula relies on two main factors: company value and return potential. Company value is calculated by subtracting net working capital minus debt, from the market value of the company. Return potential, on the other hand, is the ratio of a company's earnings to its equity, return on equity. The primary goal of this strategy is to identify companies with low company value but good return potential. According to the magic formula, the market value of a company with high return potential should be below its working capital. Implementing the magic formula is relatively straightforward. Initially, investors need to calculate the company value and return potential for all publicly traded companies in the market. This process helps investors identify which companies are suitable for the magic formula. Next, investors can select the companies that meet the criteria of the magic formula and offer the most favorable prices. This allows investors to invest in companies with high potential returns at a low price. The magic formula provides investors with a simple yet effective investment strategy. It suggests investing in companies with good company value and high return potential rather than focusing on the market's best-performing companies. Since its development by Joel Greenblatt, the magic formula strategy has become popular among investors. One of its significant advantages is its simplicity and ease of implementation. Several studies have demonstrated the past performance of the magic formula strategy. For instance, from 1988 to 2009, the annual return of the S&P 500 index was 9.6%, while applying the magic formula resulted in an annual return of 17.1%. Similarly, an investor who applied the magic formula strategy between 1999 and 2019 achieved an average return that was approximately 10% higher than the annual return of the S&P 500 index. Furthermore, there are numerous success stories associated with implementing the magic formula. For example, hedge fund manager and author Joel Greenblatt generated annual returns of over 40% while managing Gotham Capital. Additionally, there are many examples of investors achieving successful results by implementing the magic formula. However, past successes of the magic formula do not guarantee future success. Investors should always consider market trends and employ other analysis methods when making investment decisions, while also diversifying their portfolios to minimize risks. The Magic Formula investment strategy is based on a simple formula and is relatively easy to implement. Here are the steps you can follow to apply this strategy. Identify potential investment opportunities. The first step is to identify the companies you want to invest in. You can create a list by considering the sectors you want to invest in, stock prices, and financial performance. Rank the companies according to the Magic Formula. The Magic Formula ranks companies based on their high returns and low prices. The formula is based on the company's market value and capital return. By ranking companies using this formula, you can identify the most promising investment opportunities. Analyze the company's financial conditions. Analyze the financial conditions of the companies to ensure that the ones you consider for investment have solid fundamentals. Evaluate important financial indicators such as their revenues, profitability, debt burdens, and cash flows. Build your portfolio and regularly review it. The Magic Formula strategy involves creating a portfolio and regularly reviewing its performance. Include the selected companies in your portfolio and evaluate its performance regularly. In conclusion, the Magic Formula investment strategy is based on a simple formula and is easily implementable. However, like any investment strategy, the Magic Formula carries risks and its performance can vary depending on market conditions. Therefore, investors should always consider market trends, employ other analysis methods, and diversify their portfolios to suit their investment goals and risk tolerance. The Magic Formula investment strategy offers several advantages to investors. However, there are also disadvantages to consider. Here are the advantages and disadvantages of the Magic Formula. Advantages. Simplicity. The Magic Formula is easy to implement because it is based on a straightforward formula. Investors can follow the formula to identify potential investment opportunities and build their portfolios. High return potential. The Magic Formula focuses on identifying high-return and low-priced stocks, offering investors the potential for high returns. Diversification. The Magic Formula helps identify investment opportunities across different sectors and stock prices. This allows investors to diversify their portfolios and mitigate risks. Disadvantages. Insufficient technical analysis. The Magic Formula does not consider technical analysis as it relies solely on fundamental data such as market value and return on capital. Therefore, some investors may find the Magic Formula lacking in this regard. Dependency on market conditions. The performance of the Magic Formula is dependent on market conditions and the sectors in which investments are made. Therefore, as market conditions change, the effectiveness of the Magic Formula may also vary. Risks. Like any investment strategy, the Magic Formula carries risks. Investors should consider potential risks and employ risk management strategies when making investment decisions. In conclusion, the Magic Formula investment strategy offers advantages such as simplicity, high return potential, and diversification. However, it has disadvantages including insufficient technical analysis, dependency on market conditions, and risks. Investors should evaluate the advantages and disadvantages of the strategy, consider market trends, and tailor their investment decisions according to their goals and risk tolerance. Joel Greenblatt, being a successful figure in the investment world, is known for the Magic Formula investment strategy, but he has also developed other investment strategies. Here are some of Joel Greenblatt's other investment strategies. Spin-off investment strategy. This strategy involves investing in spin-off companies that emerge when a company separates one of its divisions to become an independent entity. Greenblatt believes that spin-off companies are often undervalued in the market and can present attractive opportunities for investors. Superior business return investment strategy. This strategy focuses on investing in companies with high profitability rates and low cost of capital. Greenblatt believes that such companies can provide investors with high returns. Comparison of similar companies. This strategy involves comparing the financial performance of similar companies to identify the best investment opportunities. Greenblatt believes that by comparing the performance of similar companies, it is possible to identify undervalued or mispriced companies in the market. Concentrated portfolio. Investment strategy. This strategy advocates for investors to hold a small number of stocks in their portfolios. Greenblatt applies the concentrated portfolio strategy with the aim of achieving significant returns by selecting the best investment opportunities and focusing on a limited number of companies. These investment strategies, although not as popular as the magic formula, offer alternative investment opportunities for successful investors. However, investors should conduct thorough analysis of any strategy they wish to employ, considering their own investment goals and risk tolerance. Greenblatt founded Gotham Capital, an investment fund, in 1985 and managed it until 1995. Through his investment strategies and management skills, Gotham Capital generated billions of dollars in gains with an annual return exceeding 40%. Joel Greenblatt is most renowned for his investment strategy called the magic formula, which aims to identify cheap stocks with high return potential. This strategy is extensively explained in his book, The Little Book That Beats the Market, which has gained popularity among investors. Greenblatt has achieved numerous successes in the investment world. Some notable examples include his donations for the restoration of St. Patrick's Cathedral in New York and his support for charter schools in New Jersey. Currently, Greenblatt teaches investment management at Columbia University and frequently appears as a speaker in financial publications and conferences. He and his wife have also established the Greenblatt Family Foundation, a charitable organization dedicated to supporting small businesses. Joel Greenblatt continues to be a prominent figure in the investment world, inspiring many investors with his investment strategies. Joel Greenblatt, as a successful figure in the investment world, has offered several pieces of advice to investors. Here are some of the significant advice he has provided. Be patient. Investors should think long-term and be patient. Allowing investments time to grow and being resilient in the face of market fluctuations is crucial. Have confidence in yourself. Investors should have confidence in their own research and decision-making. Rather than relying on others' opinions, it is better to base investment decisions on personal research and strategies. Emphasize fundamental analysis. Investors should focus on the fundamental performance of companies. Factors such as a company's financial condition, management, and competitive advantages in the industry are important considerations when making investment decisions. Manage risk. Investors should consider risks and establish risk management strategies when making investment decisions. Investments with high return potential often come with higher risks, so investors should manage risks while making investments. Diversify. Investors should diversify their portfolios by investing in different sectors and companies. Investing in a single company or industry can carry higher risks. Invest in cheap stocks. Greenblatt's magic formula investment strategy suggests investing in cheap stocks. These stocks can have high growth potential due to their low prices. These pieces of advice are important considerations for building a successful investment strategy. By adhering to these recommendations, investors can increase their chances of achieving successful investment outcomes. Thank you for watching my video. If you liked it, please hit the like button. If there's a specific video you'd like me to make on economic history, don't forget to mention it in the comments section. I wish everyone a pleasant day.
Universal Economic History.